Dana Sparks, broker of Maximum One Greater Atlanta Realtors, and this week's contract tip is all about making sense of the concept of a cash buyer using a mortgage for part of the funds to pay for the purchase of a property. So in the Georgia Association of Realtor contracts, under the paragraph B4, under closing and possession, it talks about the ability for one or the other party, either the buyer or the seller, to unilaterally extend the closing for 8 days based on a certain conditions. And in paragraph B4A, it states, right to extend closing date. Buyer or seller may unilaterally extend the closing date for 8 days upon notice to the other party given prior to the date of closing if, and here are the conditions. One, seller cannot satisfy valid title objections as long as those title objections can't be satisfied with paying off a lien, for example. Two, if the buyer's mortgage lender or the closing attorney is delayed and cannot fulfill their respective obligations by the date of closing, provided that the delay is not caused by the buyer. So that's if the loan is in underwriting and the lender just has not gotten it out of underwriting, or if the closing attorney has not completed the title search or doesn't have time on the schedule. So if the delays are caused by the lender or the closing attorney, as long as those delays are not caused by the buyer, then either party may unilaterally extend the closing date for up to 8 days. Or 3, the buyer has not received the required estimates or disclosure, and the buyer is prohibited from closing under federal regulations. So that obviously is referring to the TRID laws. If the lender has not sent out the required 3-day disclosures to the buyer, the parties are forbidden legally to close the transaction. So that provision says that the parties may unilaterally extend. So the part that I skipped in the first reading of that, let me go back and read that. Buyer or seller may unilaterally extend the closing for 8 days with given notice to the other party, as long as that notice is given prior to whatever closing date they have agreed on now. And the part that's confusing says, number 2, the buyer's mortgage lender, even in an all-cash transactions where buyer is obtaining a mortgage loan. Well, what on earth does that mean? An all-cash transaction where a buyer's obtaining a mortgage loan? So yes, a buyer may use a mortgage loan to pay for the purchase in a quote-unquote all-cash transaction. So basically, if you think about it, it sounds confusing at first, but let me explain, and hopefully you'll have a better understanding of that concept. So we have a buyer, let's say we have a buyer that is getting a mortgage loan to help pay for the purchase of the property. But their thought is they are not making the transaction contingent upon that financing. So for example, you have buyers that know full good and well that they are not going to have any issues getting a mortgage loan. Therefore, they are making their offer to the seller a stronger offer in that they're not making it contingent upon the lender and them securing the mortgage funds. So typically what we see is we'll see an offer come across and it won't have a financing contingency exhibit or no reference to a financing contingency. So as a listing agent, what you should do is then counter back requesting the all cash exhibit, and GAR is the Georgia Association of Realtors, has an all cash exhibit F79. Now in that all cash exhibit, it does request that the buyer provide proof of funds within a certain number of days or the seller may terminate. And of course, at this point, we're still talking about offers and counter offers and negotiating the contract. So if the buyer submits an offer without any financing contingency, the seller should counter back with this all cash exhibit requesting proof of funds. Well, at that point, if the buyer is actually getting a mortgage to purchase the property, they're not going to be able to show their proof of funds. At that point, you'll have to know they are getting a mortgage. So again, they're getting a mortgage to buy the property. They're just not making the deal contingent upon that financing going through. However, the issue is we still have TRID laws in play. And in the actual purchase and sale agreement of the GAR contract, it states that if there is a mortgage involved, the buyer or seller does have the right to unilaterally extend the contract for 8 days if the mortgage lender has not finished their duties, or if the disclosures haven't gone out and they can't close per the TRID laws, per the Consumer Financing and Protection Bureau laws. So at the very least, you should ask for a pre-approval letter on the buyer. But GAR, recognizing a lot of these issues, has come up in the May revisions of the 2017 GAR contracts coming out May 1st. So you'll see this May 1st. On the all-cash exhibit, they have addressed this issue because it has been an issue that has plagued buyers and sellers regarding the buyers coming across without a financing contingency, yet still having some protection regarding their financing that they're getting. So in the brand new coming out, it will be released and available May 1st, GAR contract package. On the all-cash exhibit, they have added a new paragraph that states right to unilaterally extend the closing date. If the buyer obtains mortgage financing to purchase all or any portion of the property, the buyer, and there's check boxes, so the buyer and the seller negotiate the option, either shall have the right to unilaterally extend the purchase and sale agreement for 8 days in the event the mortgage lender is delayed and cannot fulfill their obligations, or shall have such rights to unilaterally extend the closing date as are set forth elsewhere in the purchase and sale agreement. And further on down, it still asks for verification of funds, and there still is an appraisal contingency on that exhibit. And but the intent, basically, they've also added a subtitle to that exhibit. It says all cash exhibit, and then in parentheses it says no financing contingency. So again, it's not that the buyer is not getting a loan, it's just that they are not making the transaction contingent upon their ability to secure that financing. And it does say that, again, negotiate whether the right to unilaterally extend the purchase and sale agreement in that paragraph. And anyway, read through that. That brand new all-cash exhibit is coming out in the May 1st release of the contract revisions. There is another release in the May revision coming out to the GAR contracts regarding the community association disclosure, and I'll do a video on that next. Thank you so much for watching. I hope that explains how a buyer in a quote-unquote all-cash transaction can actually be getting a mortgage to secure the financing for the property. So hope that helps. Thank you so much for watching. Dana Sparks, broker of Maximum One Greater Atlanta Realtors, satisfying your needs with service, innovation, and education.